To Safe Option Strategies presentation of making money in the stock market with no risk. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies, and I am going to take about the next 30 minutes. This is going to be one of the shortest introduction classes I have ever done. I'm going to take the next 30 minutes to simply explain to you why you need to learn to trade the way we trade. This doesn't have to be complicated. I do a new class like this. I do a new introduction class like this every couple of weeks. And some of you have seen this presentation multiple times. Some of you have seen it dozens of times. And that's fine. And I try to give a lot of good information in these classes. I try and present you with enough information that you can walk away from this presentation saying, hey, you know what, I learned something. Even if I'm not interested in Safe Option Strategies education courses, or I'm not interested in purchasing anything from them, I still learned something. That's always my goal, and it always will be my goal. But you need to understand something. My goal is not for this class to teach you everything you need to know to be profitable in the markets and to be successful. That's what we sell an education for. At the moment in time when I am recording this, now some of you might not be watching this for a week or 2 or 3 weeks afterwards, but at the moment in time that I am recording this, it is a Wednesday morning, and the US stock market, the Dow Jones Industrial Average, is down almost 600 points. The NASDAQ is down over 160. The S&P is down over 63 points. These are big daily drops. You can see from this screenshot, this screenshot was taken just about a half an hour ago, and it's actually gotten worse since then. At this point in time, you can see right up here, if you look close, I know it might be kind of small on your screen, but if you look right up here, you can see that when I took this screenshot, the Dow was down about 504 points. It's down over 590 points right now. I think it's almost been 600 points down. I don't know about you, but I don't love this roller coaster. I don't love this, but I know how to make money in it. And I can teach you how to make money in it. Here's the thing. Over the next 30 minutes or so, I'm going to show you a couple of strategies that can completely, forever change the way you look at the markets. They can change your success. They can turn things around for you if you're not making the kind of profit and not making the kind of money that you believe you should be able to make in the market. I don't know what brought you to this point. I don't know why you're tuning in and watching this presentation right now. I don't know if you've taken some bad losses and you're looking for any possible way to recover. I don't know if you're making a little bit of money, but you feel like you ought to be able to make a lot more. I don't know, but I do know this. I know that you would not be taking time out of your schedule to watch a presentation like this if there was not something in your trading that you wanted to improve. Maybe you're brand new to the stock market and you're looking for the safest possible way to do it and to get in the market and make money, and you're in the right spot. Maybe you want to stop the bleeding because you're losing money, but you feel like the market is still a way you could make money. You're in the right spot. Maybe you're making some profit and you just believe you ought to be able to do a lot better. You're in the right spot. But I will say this, and I know when I say what I'm about to say, some of you will turn off this presentation and you won't listen anymore. But I'm going to say it anyways, because what will happen is the people who are serious, the people that really truly want to make money in the market, and the people that want to do it with a no BS approach, and the people that want to do it in a way that is logical and duplicatable and something they can do no matter what kind of an up market we're in, no matter what kind of a downtrend we're in, no matter what these roller coasters are doing to your insides and the head flips that your brain is going through and your portfolio. The people who are unwilling to invest anything in learning how to do this correctly, this is not the place for you to be. This is not the presentation for you. If you are willing to consider a small investment into learning what I'm about to introduce you to, you're in the right spot. And relative to a lot of what is out there, the investment is small. And I'll show that to you. Before this presentation is over, I'll show you what our courses cost. A lot of companies, you go and view presentations like this, and they won't show you what the course costs. They want to get you on the phone and they want to get a salesperson to talk you into it. I don't hire any salespeople at Safe Option Strategies. There is no one here to sell you our education. I will talk to you and answer questions. One of my employees may talk to you and answer your questions. No one here will try and sell you our presentation or our program. If what you see interests you enough and you're willing to make an investment in yourself and learn how to do what I'm going to introduce you to, I'll help you make a lot of money, and I'll help you not lose money when stuff like this is going on. Here's what I'm going to cover in the next 30 minutes, and I'm going to cover it really quickly. I'm going to teach you how to set up trades that have zero risk, how to protect your principal and your profit through something called collar trading. I'm going to teach you how to protect your non-collar trades using spread trading and a concept called adjusting. Okay, it's become a little bit of a buzzword over the last 5 or 6 years, but I'm telling you right now, no one has the experience that we have in teaching people how to adjust trades. If you're interested in weekly cash flow, monthly cash flow, I'm going to show you a way to do it that is so much safer than anything you have ever seen. And I'm going to have to do all of this really, really quick because my goal is to keep this presentation around 30 minutes. And then the last thing I'm going to talk to you about at the end of the presentation is learning how to fish. Is there such a thing as zero risk trading? Well, there is a trade called a collar trade. Some of you are very familiar with it. Some of you are not familiar with it at all. A collar trade involves owning some stock. Now, whenever I talk to people, I probably, this is from the best data that I have been able to gather over the years. About 70% of the people that watch this presentation that you're watching right now, or any version of it, they are interested in option-only trading. They don't want to own stock. Either they think their portfolio is too small to own stock, or they think options give them better leverage and they can make money faster. Whatever the case is, watch what we do with this type of trade. You don't have to have a huge portfolio to be able to collar trade. Keep your mind open to the possibilities of trading with zero risk. Look at what's going on in a day like today and ask yourself, wouldn't it be better to be in risk-free trades that are actually making money today instead of losing money? Or in a worst case scenario, they're staying completely neutral and break even instead of losing money? I know that's where I like having my money. A collar trade uses stock, a long put option, just like an insurance policy. That long put option is used identical to the way you would insure your home or your car. A short call option is used to pay for some or all of that long put option. And you can consistently set up collar trades with low price stocks, with high price stocks, with everything in between. You can set them up with little or no risk. Let me give you an example of one we set up a few weeks ago. Now, it's important that you understand, a few weeks ago when we set up this trade, FedEx was trading at $170 a share, and it was about 2 weeks prior to their scheduled earnings report. We got $170 a share is a lot. This is what turns some people off about collar trading. Learn the concept, and then let me show you how it applies to some really inexpensive stocks. This is just to show you the concept of it. $170.91 a share to buy some stock. At the time, a $170 strike price long put option was $6.45. This is our insurance policy. This gives us the right to sell that stock for $170 a share. Doesn't matter if the stock goes down to 160, doesn't matter if it goes down to 150, doesn't matter if it goes down to 140, doesn't matter if it goes down to 100 to 50. We have the right to sell that stock at $170 a share. This is our insurance premium. This is what the policy is worth. This is the money that we're going to use to pay for our insurance policy. We're going to get a $185 strike price short call. Someone's going to pay us $6.47 for the right to buy our stock away from us at $85 a share. Now, that does mean that at least for a period of time, the most we can make is the difference between this and this. That's the trade-off. The trade-off for having only 89 cents per share of risk. When we set up this trade, no matter what happened to FedEx, we could not lose more than 89 cents a share in the absolute worst case scenario. The trade-off was that we were maxed out around 8% profit. Now that's one trade, and that's a temporary trade-off. We're temporarily trading off protection for a cap on our profits. Look at a day like today and ask yourself, if the worst thing that could happen is you could take a fractional less than 1% loss versus an 8% gain. Tell me if you think that would have been a good thing today. Because we have that long put strike price near the cost of our trade, we have an asset, that's our stock. We have an insurance policy, that's our long put, and we have close to a zero risk trade. When you buy shares of a stock and you buy a long put option, what simply happens is that as the price of the stock goes down, the value of the long put goes up, and these will come very, very close to offsetting each other. The only part of it that doesn't offset each other is what it cost you to actually buy that long put option. Think about an automobile and think about your insurance policy on your automobile. Let's say I went out and bought a $75,000 Tesla right now today. I'm going to pay a pretty hefty premium for an insurance policy to make sure if someone smashes into my brand new Tesla, I'm not out $75,000. If my car crashes, just like this stock could crash, my insurance is all of a sudden worth a lot more to me than what I paid for it. So I'll get my $75,000 back on my car, but no one's going to give me a refund instantly on the insurance policy. It's the same thing with a long put. We're protected on our asset, but we're out the price of the insurance. That's a good trade-off. Now, if you get someone else to pay for the insurance through that covered call, you're out nothing. Okay, here's another one we did just about, I want to say about 2 weeks ago, about a week after we did the one on FedEx, we did this one on Micron. Here's a stock that's trading for about 1/3 what FedEx was trading for. $50.31 for the stock. I rounded it to 50.32. $2.42 for our protection. We can go out and sell a short call that's going to give us 321. Our average net cost per share for the stock, the insurance, and then the money we're getting to pay for the insurance is $49.53, and we have the right to sell our stock at $50 a share. This is a zero risk trade until the day the option expires. And we can be 13% profitable if we got called away. That's our cap. We're trading no risk for a cap in how much we can make. It's a pretty decent profit on a day when the indexes are giving up more than 2% and your portfolio was way down. How good a trade-off would that have been? Probably pretty darn good. Zero risk. And you can find stocks that you can do this with day after day after day after day. When you add to that the ability to cost average. Now, for those of you that don't know, most of you probably know what cost averaging is. You buy a stock, price of the stock goes down, you add some more shares, price of the stock goes down, you add some more shares, stock goes down, you add some more shares. Now your average price per share is a lot less, so the stock doesn't have to go up as far for you to get your profit back in the stock, okay? That's what cost averaging is. When you cost average with long puts, as the price of the stock goes down, this is the same setup I was just showing you a minute ago, as the price of the stock goes down, the value of the long puts go up, and we sell the long puts, and we use that money to buy more shares. Now, here's the difference. Doing this model, I had to come up with $80 a share right here. I had to come up with $60 a share right here. I had to come up with $40 a share right here. You keep adding money. You keep adding money, adding money, adding money, adding money. Over here, you bring this money in and spend this money out, and this is a wash. You have increased the number of shares you have in the stock, but you have not increased your investment. And as a result, you dollar cost average way lower for no additional investment. This is what we teach people how to do at Safe Option Strategies. This is one of the main things we teach people how to do. Imagine being in the market with zero risk and the ability to make a lot of money. Okay, 3 weeks ago when we set up that FedEx trade, FedEx was trading at $170 a share. They tanked it on their earnings. They had their earnings about a week later, and their earnings came in dismal. Global economy shrinking, recession fears, competition from UPS and Amazon doing more of their own delivery instead of relying on these guys as much. They just absolutely went in the toilet. Since the time we set up that trade, the stock is down $30.88. Look at what our long puts are worth right now. They're worth $31.95, up $25.50. Look at what our short calls are worth right now. The profit in them have gone up $6.15. Our average price per share to get into this was $170.89. The stock is down $30.88, and our long puts and our short calls are respectively profitable $31.65 per share. Well, let me go back. I didn't mean to scroll away from that. I went away from that too quickly. Folks, the people who don't know how to do this are down almost $31. The people that know how to do this on a stock that's down $31 are up about 85 cents, almost 90 cents. Not only have we not lost any money, we're up a little bit. A couple of years ago, we recommended to all of our students that they get into some shares of Under Armour. Those that wanted to, those that could afford it, we recommended that they get into some shares of Under Armour. Doing exactly what I just showed you in a real life scenario, we added shares, we added shares, we added shares, stock came back up, had a dip, we added shares, stock came back up, had a dip, we added shares, stock's back up. We're up 95%. 95% profitable on a stock that started out over $47 a share, and at the time I took this screenshot was trading just a little bit above 20, down more than 50% over this period of time, and we're almost 100% profitable doing just what I showed you how to do. You think you have to have a ton of money to do this? You think you have to have money to own hundreds of shares of expensive stocks? Ford Motors trades for less than $9.50 a share. This is a month old. This is almost a month old. Since then, Ford has come back down here, and now they're back up about here. We did the same thing with Ford. Took a lot smaller investment. Up, down, add shares. Up, down, add shares. Up, down, add shares. We're up 71% on Ford in about a year and a half. This was not a huge investment. And this same trade could have been done with 100 shares for a little bit less than $1,000 investment. This exact trade could have been done for less than $1,000 investment. This is not something you can't afford to do. And if you really truly want to learn how to trade risk-free, you got to learn how to do this. Now, for those of you still not convinced that you want to own stock, the same concept of adjusting trades applies to option-only trades. And the reason you have got to learn how to adjust trades, if you want to survive this roller coaster market, you've got to learn how to adjust trades. And the adjustment comes in the pre-planning. Anytime we get into a trade, directional long options, credit spreads, debit spreads, straddle strangles, combination trades, anytime you get into a trade using options only, you have an expectation that the stock is going to go up, or the stock is going to go down, or the stock is going to go sideways. And you set up your trade based on what your research and your due diligence tell you is the most likely scenario. But don't ever forget, you are making an educated guess when you do this. And when you're making educated guesses, let me back up just a second. How many of these three guesses were correct? And how many of them were wrong? Well, one of them was correct. The other two were wrong. Every time you place a trade, it's not a 50-50 proposition, folks. The likelihood is it's a 33% proposition. And that's what people don't understand oftentimes getting into the market. Now, you can do a lot of research and a lot of due diligence that shifts those odds to your favor. So it's not just purely a guessing game out of these three things. But even if you can watch the right technical indicators and do the right research and listen to the right people, you're still only going to be right about 75% of the time. And that's why I hear over and over and over again from people I talk to every single day, I hear that 3 out of 4 of their trades are winning, or it might be 5 out of 6 or 9 out of 10 of their trades are winning. But the one trade that is losing is costing them their portfolio, because when you're dealing with options only and you think you know what's going to happen and you don't, or you just have some bad luck, wrong trade at the wrong time, or you're setting up trades and trying to trade without the knowledge and the ability to make adjustments to those trades. And these are the things that people are doing all the time. One or more of these things is what they're doing all the time. Simplest definition, it's kind of a long definition. I'll read this really quickly for you. A trade adjustment is this. When you roll one or more of your options in a spread trade or a collar trade, or when you add a new option to an existing trade such that the roll or the addition of the option changes the expectation, the target break even, or the target profit of the trade, or all three. That's what a trade adjustment is. Okay, it's knowing when and how to add or to roll an existing option such that you literally change the course and the trajectory of the trade. And you've got to learn how to do that. Without it, this is what happens to people all the time. This scenario or something very similar to it. They place a trade, they make some good profit, they take their profit, they add it to their principal so that their next trade is with a little bit bigger amount of money. And the profit on the next trade is even bigger from a dollar standpoint. And they do the same thing and they wash, rinse, repeat, and everything is going great until that one trade that suddenly goes against them, and they had a lot more money in this trade because they're reinvesting their profits. That's a good thing. You should be reinvesting your profits. But you know, if you trade options, you know that it takes very little to be down 60, 70, 80% when an option trade suddenly turns against you. And 3 out of 4 trades going your way still ends up in a hefty loss. When you learn how to make adjustments to trades, you do those same 4 trades, and because you set it up correctly, and because you had the knowledge and the experience and the help making an adjustment to it, you don't lose money on it. And the difference is that you're up 52% instead of being down 35%. You're more than 86% difference in these two scenarios. And one of the core things that we teach, whether it's with option only trades or whether it's with stock trades, one of the core things that we teach at Safe Option Strategies is how to adjust trades, how to set up the trade correctly, knowing when and how to make the adjustment, and then knowing the right way to follow through on the adjustment. Now apply that same principle to shorter term, faster moving trades, and you can create a very consistent, very steady cash flow with far less risk. Whenever people look into cash flow strategies, and there are dozens of them out there, and I know some of you that are watching this presentation, you've purchased someone's cash flow, money-making machine, stock market, print your own money in the stock market, make millions of dollars off of your $5,000 just like I did. Fly around the world day trading and make millions just like I did. This is what people do. This is what people sell. And the majority of them, not all of them, but the majority of them do it with credit spreads. And I like credit spreads. I like that you can get paid to be in a trade and make a really nice profit. I love that. That's a great concept. That is a fantastic thing. You want to know the problem is? Problem is credit spreads are far more difficult to adjust than debit spreads. Did you know that in most cases you can, and did you notice I left these bull put spreads up here? These are all 3 good bull put spreads. I left them up here and they're kind of shaded in the gray right here. I'm using the same stock. I'm using the same expiration day. I'm using the same strike prices. And I'm just doing an in the money bull call spread, And this is one example. We do a lot of different trades. This is one example. I'm using an in-the-money bull call spread because the profit is approximately the same. The risk is approximately the same. And the difference is, if I'm wrong and these trades go against me, it is 10 times, maybe 50 times or 100 times easier to make an adjustment to an in-the-money bull call spread than to a credit spread. Do I teach people to never use credit spreads? No, I don't. Do I like credit spreads? Yeah, I do. If I can find the same return or similar, same risk or similar, same duration in the trade, and the same strike price options, and I can do an in-the-money debit spread instead of a credit spread, I'll do it 100 out of 100 times for the simple reason that one is easy to adjust and one is not easy to adjust. And that one change in what you're doing, that one different thing in what you're doing can make all the difference in the world when it comes to being profitable. This is the last quarter worth of our spread and cash flow trades. This is 1 quarter. And this is how far up we are in that quarter. This is 3 months worth of cash flow and spread trades. The cash flow trades are largely spread trades, but they're longer in duration. We open them, we're usually in them for 2 or 3 weeks. The cash flow trades we're in and out of oftentimes in a week or less. This is what we're helping people do. This is how we're doing it. Oh, I forgot to put those last 2 up, or 3, that got us to that 38. In all of our trading, collar trade, spread trade, cash flow trades, I forgot to update this. It's up about 10% from where it was 3 weeks ago when I recorded this class the last time. That should actually say about 55% right now. And it hasn't gone down with today's 600-point sell-off on the Dow Jones. Folks, if you're not beating the markets like this and you want to, let us help you do it. Let us help you make this kind of money. Everyone's heard this, right? I know you've heard this before. Feed a man to fish, you feed him for a day. Teach a man to fish, you feed him for life. I believe that. I think that's one of the smartest things that we should live our lives by. I think anytime you can learn how to do something on your own and not need someone else or not be relying on someone else to do it, I think that's a good thing. But I got to tell you this, true story. I have 2 really good friends. One is a good friend that I've known for over 20 years. One is my brother-in-law, who I've known for almost as long a period of time. And even if he wasn't my brother-in-law, he's a good friend. They are both really good fishermen. I've been fishing with these guys and I am amazed. They just, no matter whether we're fishing on a river, a lake, the ocean, they seem to know right where to cast their line in. They are pulling fish out no matter where we're at. A bad day to them is if they're not catching their limit. And these guys know how to fish. Now, they have tried patiently for years to teach me, and I've gotten a little bit better. They teach me how to bait the hook. They teach me how to set the hook the right distance from the bob or from the weights if they want it to float a little bit off the floor of the river or whatever we're fishing in. They teach me how to set the depth right if we're out on a boat in the ocean. I've been halibut fishing and swordfish fishing, and we've done this different stuff. And they coach me through all of this stuff. And I am getting better. And they've got a knack for this that I just don't have. But I'm telling you right now, if the 3 of us got sent out into the wild and we had to live off of what we could catch fishing, I would die. I would starve to death. And there'd be no one who could prevent that. They would be fine, but I would starve. And so I ask you the question, what happens if a person starves while you're trying to trying to teach them how to fish? If you can't keep them fed while you're teaching them, you're really only covering half of what's needed. I do believe it's important for people to learn how to do this on their own. But we take a huge, huge step beyond that at Safe Option Strategies, and we teach you how to fish and keep you fed at the same time. Every one of our students gets trading help at no additional charge. We help them set up trades, we help them adjust trades, we help them exit trades, we help them with trades they already have open before they come to us, we help them with trades they put on when they're with us, and we send them trades every single week, multiple times during the week. We send out trades that they can get into and just follow exactly what we're doing. We keep them fed very well while they're learning how to fish. One of the hardest things when you invest money in an education company like mine, when you make that decision that you're going to spend some money on investment education, the question that should go through your mind is, how long is it going to take me to make this back? Is this going to take me 6 months or a year to learn this, and I can't make any money on it until then? That takes a giant leap of faith. I got to really have some confidence in this place if I'm going to spend $5,000, $10,000, $15,000. By the way, you can't spend that much with us. We don't charge anywhere near that. But you know, people that are thinking, how am I going to invest $10,000 in this, and it might be 6 months or a year before I can start making any money back. We are the opposite of that. From the day you join this program, you can start putting your money to work for you and start earning money and being well fed so that the pressure is off as you learn it. I'm so confident in our education and in our ability to teach you how to do this and how to be profitable that I know you'll never have any desire to go purchase other investment education again. But I also give the best unconditional money back guarantee that exists in this industry. It is simple. If I cannot teach you how to make money, I will give you your money back. I make the education risk-free and then teach you how to set up trades that are risk-free. I have never used anything other than one criteria to measure the success of my company, and that is whether or not my students are successful. I don't care if 20, 30, 50 people sign up in my program this week or next or this month. I don't care if 2 people sign up. I don't care if none sign up. The ones who join our program, I will do everything I can legally do to help them be profitable. And if I can't, I will give them their money back. It is that simple. There are 3 different ways, actually 4 because you can combine them. There are 3 different programs or courses that we have at Safe Option Strategies. If all you want to learn is the collar trade program, we have a 1-year or a lifetime membership. If all you want to learn is the weekly spread trade program, we have a 1-year or lifetime membership. If you want to learn the cash flow program, we have a 1-year or a lifetime membership. Obviously, if you added all 3 of those courses up, they would get kind of pricey, but we never charge people that much money when they add them up. Right now, and this is for a limited time, we are offering any one of the 1-year memberships for $1,000, any one of the lifetime memberships for $1,500. And even though if you added those up, they would be $3,000 or $4,500 respectively to do all 3 courses. For a limited time, we are offering $2,500 for a 1-year membership to all 3 courses, or $3,500 for a lifetime membership to all 3 courses. And only for those individuals who will take the time to either email or call, I will offer a deeper discount on the complete course, meaning all 3 courses. Let me back up and explain this a little bit. This is the lowest I'm going to go for an individual course. These are the lowest prices I've ever sold individual courses for. If you want all 3 courses, or if you want to inquire about it, inquiring does not obligate you to buy anything. I hope you know that. Inquiring just means you're going to pick up the phone or you're going to send an email and you're going to say, what's the added discount you're willing to give me right now if I'm interested in all 3 courses? And if you're interested in all 3 courses, I will share with you an additional discount that I'm willing to give, and I'm only giving it to those people. A phone call or an email at this point in time shows me that you're serious about wanting to learn this. And I'm willing to go to a deeper discount if you are. It's as simple as that. I don't hire salespeople. So instead of paying a commission, instead of getting someone to talk you into this, I simply reward those individuals with a deeper discount who are proactive enough to email or to call. You don't even have to click on this email. On the web page that you are watching this presentation on, right below the box that the video plays in, is a form that you can just type in your email address and your phone number if you want to call. Don't put your phone number in. It won't require you to put your phone number in. Don't put your phone number in if you don't want to call. I'll only call you if your phone number is there. There's a space to ask questions if you want, but all you have to do is put in your email address and hit the submit button. And that, to me, is good enough to say, I'm curious about what deeper discounts you're offering right now. Folks, I came really close to 30 minutes on this. I might have gone over a little bit. I'm here to tell you that this is what I'm going to end with. And your screen should have just gone black. Don't think the program ended. Your screen should have gone black. Let me back it up one spot so you don't think we're gone. Okay. I cannot be. I hope this comes out as sincere as it is intended, because this is intended with nothing but the absolute most sincerity I can offer. Nothing other than my family brings me greater joy than helping people that have suffered losses in the market or that are struggling with trading. Nothing brings me greater joy than helping them. When I get emails from my students, and I get them all the time, when I get emails from my students happy about the trades that they're in, happy about how it's turning things around for them, there's nothing that makes me happier from a business perspective. There's nothing more important to me than being an honest businessman from a business perspective. Again, my family is the most important thing to me, but from a business standpoint, nothing is more important to me than being an honest businessman and treating people fair. I don't know if we're the right fit for you or not. I hope we are. I hope you've seen something in the last 30 minutes that makes you want to at least inquire and find out what kind of deal we can give you. If you trust me and you trust my company to help you learn this, the one thing I can absolutely unequivocally guarantee is I will either help you make money or I will give you your money back. It is that simple. I know it's a leap of faith to trust someone and purchase an education program, whether it's $1,000 or whether it's $3,500. I know it's a leap of faith no matter what it is. But if you take that leap of faith and you show some trust in me, what you're going to get is someone who is here to help you be profitable and to keep you fed until you're the best fisherman that the markets have ever seen. I hope I hear from you. If not, I wish you the absolute best of luck. Thanks, everyone. Bye-bye.